Hello, everyone. Welcome to the Board While Waiting show. For those who are new on this channel, I'm a regular 9 to 5 worker in the tech industry, and this is where I transparently show my growth portfolio. The purpose of this channel is to achieve financial freedom, which for me is a target of 3 million US dollars. This portfolio focuses mainly on investing in high quality businesses that have high growth potential over a long term horizon of at least 10 years. There are currently 5 stocks in this portfolio, and today I'll be diving into the investment thesis for Meta. But a quick update as of the market close on Friday, 22nd of September. The portfolio is currently down, minus 4.1%. I think, as many of you know, this is in line with the recent hawkish stance that the Fed has taken when Jerome Powell took the stand just last week, where he mentioned that the Fed will continue to remain very focused on bringing down prices, and because of that, interest rates are going to remain where they are for a prolonged period of time. And because of that, the market reacted very negatively, and there was like 2 consecutive sessions of market going down. So, yep, the portfolio was quite affected from that. So, whenever I invest, coming back to Meta, the first thing I look for is what underlying tailwind trend the business is riding on. It's far easier for a company to ride the trend since a rising tide will raise all the boats with it. So, when it comes to Meta, its business serves 2 groups of people. The first are advertisers, and the second are consumers like you and I. So, for advertisers, Meta is part of the tailwind transition from traditional to programmatic advertising. With its large data set of consumer profiles, Meta is able to provide companies with precise targeting tools for advertising, giving them a higher return on advertising. On the consumer side, you would think that they've saturated growth, but if we look at the total number of global mobile users estimated at over 6 billion at the moment, Facebook has about actually only half of that. And Instagram and WhatsApp has only about 1/3 of that. So Meta is also a strong contender in the AI space with its Llama open source project, and is well positioned to ride the tailwind trend of AI adoption. Now, apart from the trends I've mentioned, I also like businesses that have moonshot chances of success. So, moonshot chances are basically new potential revenue engines or significant cost reductions that can impact a business's bottom line. In the case of generative AI, I believe that Meta is potentially a huge beneficiary for a few reasons. Firstly, with generative AI tools, advertisers can potentially reduce their OPEX on running ad campaigns, cutting down the number of staff that people will normally need to run ad campaigns, time to create new ads with the launch of generative image or video tools. And this also means that from the reduction in OPEX funds that clients usually have to invest, they would then be able to channel that into ad budgets, increasing them, which makes more sense for them, right? Because they want to put more dollars into Facebook advertising, and that would, of course, in turn increase Facebook's revenue. So it's a win-win with the development of generative AI tools for creative marketing in that sense. With the release of Llama as open source project, Meta is also surprisingly entering the enterprise space. So Meta has actually already had other enterprise applications. For example, in the company that I work in tech now, we actually use Workspace. It pretty much is Facebook for enterprise. So we're sharing internal discussions in our Workspace that's being run by Meta. So Meta already has some roots in the enterprise space. Now, with Llama, it's actually a Trojan horse for enterprise cloud services because, as you can see here in this article, the part that I've underlined, although Llama is free open source, large corporates like Microsoft, Amazon, or Google will be charged if they are bundling Llama into their cloud service offerings. So it's still too early to tell in the AI evolution, but this definitely adds some extra revenue optionality for Meta to monetize in the future. And I really like that. There is, of course, the whole Reality Labs VR portion. But I don't think we're going to see the impact of this moonshot chance anytime soon. The world is definitely very much in the revenge traveling mode ever since the recent pandemic has subsided. And I would argue that most people would prefer in person interactions and experiences versus sitting in a room, at least for the next number of years. However, in maybe 10, 15, 20 years from now, I do think that the whole idea of the Ready Player One concept would be more readily embraced. So it's nice that Meta or Mark Zuckerberg does have an eye on slowly building that platform. And I do acknowledge that he has taken some steps to scale back on this pet project and shifted his focus more on AI. So I think it's kudos to him. It's a lot of bringing down his ego on this subject, but still, it just shows how hungry he is. With Zuckerberg, it is very clear through the shares he owns that he has an enormous amount of skin in the game. His last known net worth publicly is about 106 billion US dollars. So this makes his 103.9 billion dollars right here on the screen a staggering 98% of his wealth. Now, in addition, as we know, Mark Zuckerberg is really young. He started Facebook when he was really young. He's currently only 39 years old this year. He lives a very healthy lifestyle, exercises a lot, been doing like jiu-jitsu battles, going for like competitions. So I believe he has a very, very long runway to go running Meta as its captain. And this is a very good sign in terms of measure of skin in the game and how long this marathon run can last for with him at the helm of it. So yeah, I think he has shown absolutely no sign of stopping. He's definitely in this for both the money and his own sort of, I would say, pride in the game. So I'm confident that he will serve as an incredible steward of Meta for the next 1 to 2 decades. What are the bear cases for Meta? Now, the first is, of course, TikTok's surge amongst the young demographic. Right now, TikTok still falls behind Instagram, WhatsApp, and Facebook in terms of the number of users. If you can see in this chart. So TikTok is right here down in the middle. However, TikTok in this table here does have a very large portion of its demographic in the below 24 category, i.e. the Gen Z category. So this is something that Meta needs to watch out for because the next generation of young users usually determines the next phase of the growth trajectory as these young people start to become more and more valuable consumers for targets of advertisements. So based on this table, if we just do really quick calculations, the number of TikTokers below 24-year-olds is about 530 million users, and this continues to grow. Compared to Instagram, if we do a similar calculation, this is the diagram for Instagram. On the left here, which is in the red rectangle, is all the females and males. If we add it up, that's about 776 million Instagram users below the age of 24. So it's about roughly maybe 200 million plus difference. Instagram is currently having that advantage, but they're not that far off. And in fact, if we compare the below 17-year-old segment, TikTok is very, very close at 157 million users for TikTok versus Instagram at 160 million. So it's almost negligible. They're neck and neck for the below 17 demographic. So you can see why Mark Zuckerberg is quite tense when they came in and very ruthlessly pushed out the Reels feature, which pretty much is a copy of TikTok. I mean, they've done the same with stories when Snapchat threatened their domination in social media. So you can see how ruthless he is and very quick and efficient the way that he rolls things out. So there are a few reasons though why I think Instagram will continue to hold dominance over TikTok despite TikTok's surge recently. The first reason is regulation. So in the US right now, there is of course a lot of anti-China sentiment. Regulators also are pretty much against TikTok because of its so-called association, and the business environment is getting increasingly difficult for TikTok. I actually watched most of this Congress hearing with the CEO, Shou Zichu, who is actually a fellow Singaporean like me. Very charismatic, this guy. He's very calm. He won a lot of fans in Singapore. But actually, if we try to be a bit more objective, there were a lot of holes in his arguments, unfortunately. For example, I find it quite difficult to believe that although TikTok's HQ is based in Singapore, what he's saying is that ByteDance in China, which is the main owner of TikTok, has zero influence over it. So, just want to put it out there. I have worked with and continue to work with a lot of GCR businesses, Greater China Region businesses, and I'm quite certain it's not the culture of the Chinese to just cede any form of control of a subsidiary just like this. So I don't really buy that story that there's clear division and separation of power. In addition, during Congress, the CEO of TikTok actually mentioned that, I quote, "We, that is TikTok, do not remove content at the request of the Chinese government." However, there's actually been a lot of examples of CCP's influence in TikTok content, such as the banning of Enes Kanter Freedom that I put here in the red rectangle just earlier this year, because he's widely known as a CCP critic. And there's also been a lot of allegations against TikTok over the recent years that does not really help the case of TikTok in the USA. So I don't want to get too political over this. This is just observations. But yeah, there is that regulatory risk for TikTok. So this in turn, coming back to the whole thesis of Meta and the long-term pole position of Meta, I do think that this risks against TikTok works for the benefits of Meta in the long term. Now, apart from that, if we continue on the subject on TikTok, apart from the anti-TikTok regulatory environment in the US, anecdotally, I did have a chance recently where I met a TikTok content creator with over 1 million users, and what I heard was really interesting. Apparently, during a visit to the TikTok office, what I learned was that it's possible. I didn't visit, but this content creator visited. It's actually possible. What this person heard was that it's possible for people to pay the TikTok team. I don't know whether it's secretly or officially. It's probably the former, secretly, to actually tweak the algorithm so that it benefits the creator's content ranking. So this means there is some form of unfair practices that's going on in the TikTok FYP For You page ranking algorithm. And this content creator also mentioned to me that from interactions with the community, this creator actually feels that Reels, Instagram Reels, is on the up and coming versus TikTok. So things are actually looking pretty good for Meta in terms of short form video, which was a pain in the ass for them in the last few years with TikTok's rise. To conclude, I think Meta has a very long runway to go, and it makes for an excellent investment despite competition from TikTok. I haven't even covered the huge potential that is WhatsApp and how they're starting to turn on the switch to start monetizing that. And also how Facebook, despite being the oldest of the family apps, still retains pole position in terms of monthly active users globally. So Mark Zuckerberg has shown tremendous adaptability, from copying stories from Snapchat to copying Reels from TikTok. So he may not be a true original in some of these features, but he is ruthless in execution and continues to be super hungry despite all his wealth. So I'm very happy to be a shareholder alongside such a hungry leader in Meta. As of the recent market close, Meta forms the majority of my portfolio at 29%, and I'm happy with this arrangement. In the next few episodes, I will analyze the other remaining stocks on my portfolio, namely The Trade Desk and Mercado Libre. So see you next week, everyone.